let's get on with it without further ado. So let me introduce you to one of our source partners. So those are the two people that I just said, Tim and Gully. They're also source partners, but this is Nigel. And Nigel bought that house. It is actually that house in the background that's in the picture. And he purchased that house for £200,000. And he did a refurbishment of that house for £220,000. So £420,000 all in. Now, the purchase price, let me just go back. The purchase price for that property was £200,000. That is what he paid to buy that property. The refurbishment in full cost £220,000. And Nigel was able to borrow all of that money, all of it, to do that. So usually when you're looking at projects, certainly when I started out in property, the first thing that I would ask myself is, how much deposit do I need? How much deposit do I need to do this property project? And of course, you're going to have upfront costs, and you're going to have like stamp duty, for example. You are going to need to fund those costs anyway. But I'm talking about either the purchase price or the refurbishment cost. How much of that do I need to contribute to myself? Because that tended to be the most amount of money that I needed to put into that deal. Now, for this deal that Nigel has done, so this is not something of the future, this is in the past, this is factual, this has actually happened. Nigel contributed zero of the purchase price or the refurbishment cost. He was able to borrow all of that money. And we'll talk about that a little bit later on. Now, we are sourced, and as part of sourced, we have source property, and source property helps people monetize property. It helps people build their property empires, and that might start out with concentrating on cash flow, and it might grow into doing commercial conversions, or it might grow into creating a portfolio of HMOs. There are lots of different directions that you can go in property. We as source stand by people's side and provide them a package of goods that allows them to do that. Part of that package is access to source capital. Now, source capital is a lender. They are registered with the FCA, and they're an FCA registered peer-to-peer lender. We don't need to go into too many details about that. The important thing is that gives us a very interesting perspective on property that other people don't have, because on one side we're helping people to monetize property. We're coming up with solutions to help them get property deals across the line. And on the other hand, we are the lender. So we can put that knowledge and that experience together to create webinars like this, to give you the content and the value that you need to get deals done. Whereas nobody else has this perspective. Nobody else looks at this from a lender's point of view and thinks, okay, well, if the lender needs this, then how can we solve that problem? How can we mitigate for the questions that the lender is going to be asking us? And so because that's part of our ecosystem, that's why we can provide such incredible value for our existing partners or for people that tend to that want to come onto our webinars and learn a little bit more about property. So what you're going to learn today on this webinar is about the contract flexibility. So all the way through the process, when you're buying just a bog standard house, you know, if it's a buy to let, you're buying it through an estate agent and you're going through the normal, usual channels. You might not even be aware of the flexibility in what you can do and how you can structure that deal based on the contracts that you've already been using to purchase houses. We're going to talk about different structures, so how you can put structures together to help you buy houses that other people wouldn't be able to buy. Other people, you know, if we took a carbon copy of your situation and we taught you the stuff that we're going to teach you on this webinar, then the version of you that has the information on this webinar will be able to buy more houses, to get more deals over the line, and to access the profit margins of more projects. We're going to teach you how to negotiate as well. We're going to teach you what the best way to start negotiation and who you should be negotiating with. Because look, this is property, and property is a people game, right? So you should be able to, and you want to make sure that you've skilled yourself to the right level in order to hold negotiations and to stick up for yourself in negotiations with people that you're dealing with. We're going to teach you about lenders, and I'm going to point out what the lender's perspective is going to be. And I'm going to show you why the lender thinks that, because what is the lender's priority? Why are they asking for that? What are they doing? And then those of you that stay all the way to the end, we've got a bonus strategy as well that I'm going to share with you. This is another deal that was done by one of our source partners. And this is, again, this is the CGI image of that deal. That is a hotel that has been bought already. And that hotel was bought and was changed into flats. Purchase price, £570,000. Refurbishment price, just over £1.1 million. And again, of that purchase price and of that refurbishment cost, that individual didn't put any of their own money into that property. So we as sourced, I've shown you a couple of people that have obviously bought significant properties that they've added to their portfolio. They've made a lot of money out of. Overall, we've helped franchisees build over £80 million worth of property, which was completely funded by us and by our lender. We've also assisted franchisees buy property from outside of our lender as well. So because our perspective and because our purpose is to help franchisees get deals across the line, we're not limited. We don't only send them to source capital. We don't only suggest that source capital is the correct way to fund a deal. If there's a better way to fund a deal, we push them in that direction instead. We encourage them to go with the best option for them. So £80 million worth has been funded by us, but overall we've helped people get over £125 million worth of property deals across the line. So my name's Chris Kirkwood and I'm the Managing Director of Sourced. Overall, I've started and scaled and sold businesses across multiple sectors. And in 2008, property was just a sideline, right? It was just a side hustle for me because I was running another business and I was putting my spare time into building a property portfolio. But it's only because that property portfolio didn't perform as well as I wanted it to that I started to look into property in a lot more detail. I started to explore different ways of doing things in property. And because of that, and because of that education that I've got, I then joined up with Sourced, and we developed this no upsell property core training approach, which is, you know, if you go to a lot of other people, they'll have a free course, which you can then upgrade for a couple of grand onto a weekend course, and then they'll have a 12-month course. We've created something completely different here at Sourced. If anybody wants to become part of Sourced, the contract is for 5 years. So we're committed to each other. We're committed to that business relationship for 5 years. And we provide all of that facility, which we'll talk about later, all of the facility to you for that 5-year period. And there's no upsell. You know, you don't need to worry about whether your membership's going to run out. We'll talk about that later. Because of that, we've got over 220 people that are part of Sourced, and rely on us to stand by their side and to help them build their property wealth. We've assisted and advised on over £350 million worth of transactions. We've got a huge amount of knowledge and experience of dealing with all the different property strategies. And indeed, we've even come up with some property strategies ourselves, which we communicate to our franchisees to give them a head start in comparison to everybody else that's out there in the market trying to buy properties. But the main core of what we do is solutions-based thinking. It's a really important. If you're working on your own in property, it can be quite daunting and quite lonely, can't it? And you might start out on a Tuesday. Let's use Tuesday as the example because that's what day we're on. You might start out on Tuesday and have an incredibly positive mindset, and you'll be thinking about solutions all day Tuesday. But then you get to Wednesday, and your mindset might be completely different. Most people in property, I'd say, especially people that are trying to build their own property wealth, work on their own. And so you are constantly subject to your own mindset. So one of the brilliant things that we bring to this community is that we're always looking at solutions-based thinking. We're always pushing each other to think of ways that we can solve problems in order to get more deals across the line. Ooh, I've forgotten about this part. So let me go to, in fact, I'll just head back to the menu because I've got a poll, so I want to ask you a question. Let me just go to the right parts. So, deals, there we go. So you should have a poll on your screen right now. Sorry, I've just moved it. I realized that might have been a bit irritating because you're going to click on it. So here's the poll. The poll is, what do you consider success in property? So if you could answer this question, is it making a constant cash flow? Is it having regular side projects? Is it working on property full time? Or is it simply creating wealth? Just creating wealth out of property. What is your version of success? It would be very interesting to hear what you're trying to achieve through property. So I'll just leave this on for another 10 or 20 seconds or so, and then we'll move on. So if everyone can participate in this, it would be much appreciated. And this is a really interesting question because cash flow, this tells me where you want to be longer term. Because are you trying to supplement your regular income, or are you looking at that longer term? Because generally creating wealth will be a longer term thing because you're looking at the capital appreciation, and the more you rely, or the better you can leverage like the long term property growth of the market, generally that's going to help you out. So lots of people have answered. Really appreciate it. I will end that poll now and we will move on. So these are the things that I'm going to teach you. 5 ways to maximize your position, with the bonus 6 coming towards the end. So we're going to look at higher deposits, but we're solutions-based thinking. So we're not just leaving it at higher deposits. We're going to look at how to solve that problem. We're going to look at other security. We're going to look at below market value and what that really means, and how you can use it, and what the lender thinks of it as well, which is a really important point, why lenders like below market value. We're going to look at creative purchases. We're going to look at 2 different versions of a creative purchase. And I'm actually going to mention a third as well, which you can probably find out about from one of our previous webinars or even our YouTube content. And then we're going to look at joint ventures, but not joint ventures how you might think of it, a different way of joint venturing that can solve your problems for you. So lots of content coming your way. So if you haven't already got a notepad and pen, I strongly recommend that you get one. So let's look at higher deposits first of all, and why the lender asks for higher deposits. And really, you've got to get into the mindset of thinking that what is the lender's purpose? What is the lender's priority? And that is risk management. That is what lenders are absolutely focused on. So in times where the property market is rising and interest rates are low, and there's no suggestion that interest rates are going to increase, and there's no suggestion that the property market is going to stall, then lenders will offer the higher loan to value than in comparison to different situations. So, 100% mortgages, for example, they were around a few years ago when those conditions were relevant, when those conditions were in the market. Now, what happens when interest rates start rising? And that therefore puts the repayment that you're making on your mortgage more at risk to the lender because it becomes more unaffordable, then lender put down their loan to value rates. And that requires more money from you to put in to purchase the same property. So in good times, the lender might offer you 80% loan to value. But when times are a bit more tricky, when interest rates are high, or when the market really isn't going up or showing any sign of going up, then you're going to need to put in more money. And we've seen this over since COVID, right at the end of COVID, that the market went absolutely bananas, right, in terms of property prices going up. And during that time, you saw lenders increase their loan to value. But then when the market stagnated and when interest rates started going up because inflation was going up, the loan to value for exactly the same deal was reduced. And therefore, you needed to put more money in. And guess what that did to the property investment market? It meant that there was no competition because nobody could afford lending at that time. Okay, so that's the priority. That's the perspective of the lender based on the market, and that's how it affects you. It means that you need to put more money in. And what do most people do at that time? Well, we saw it. We saw it at that time. Most people say, "Oh, I can't afford that," because the requirement for them to put a deposit in has now gone from £20,000 to, let's say, £40,000. And they just say, "Oh, I can't do that," and they walk away, and that's it. But because we're solutions-based thinking, what we do? Well, even in this very, very simple example, we help our franchisees, we help the people that are part of Source to raise that money. Instead of looking at that as your responsibility to come up with that money yourself, you can borrow that money from somebody else. You could use that same deal, and you could bring in an investor to give you that money that you're lacking. Now, obviously, that relies on the deal still working based on the amount of money that you need to pay for the investor's money as well. But that's all just part of putting that together. And in fact, there's lots of different ways that you can structure that repayment. There's lots of different ways that you can structure the security. You could use an RX1, you could use a second charge, you could use a personal guarantee, or if it's not just simply repaying them, you could offer them a shareholding in the property. So they might retain, I don't know, a proportion of the shareholding that is relative to the amount of money that they've put in. So if they've put in 10% of the money, they might have 10% of the shareholding. And therefore, if you're going to rent the property out and you're going to make a rental income from the property, they'd be entitled to 10% of that rental income. And putting all of that together is something that we teach our guys to do, because it's something that works. And in fact, we have a facility that we've created for them. We've got an app that they can advertise opportunities like this out to investors to get investors interested to put that money in. And we've seen a huge amount of success, because what we teach our guys to do is all property stuff. We teach them about property. We teach them how to do their due diligence on property. We teach them how to predict whether the likelihood of a deal working or not is going to be. And a lot of people don't have that skill, but they do have the money. So it's like a JV. It's like these people are putting in money for a short period of time, or longer if it's a shareholding opportunity, and then they can both win out of doing that project together. So even a lender coming to you asking for a higher deposit, that doesn't mean that the deal is dead. It's another hurdle to jump over, yes. But, this is property. That's what happens all the time. That more hurdles are put in front of you, and it's your responsibility to overcome those hurdles. There was a deal, it was about 12 months ago now, to be perfectly honest with you, that was put onto our app. And within 24 hours of that deal going onto the app, that particular franchisee had 65 investor inquiries. Now, the thing, again, I'm always looking for opportunity. And so what that says to me is, not only will they be able to find the funding for that particular deal that they advertised out on the app, but also they've got a lot of other investors that are in their pipeline now that they can have a conversation with and hopefully get to work with on the next deal, and the one after that, and the one after that, and the one after that. Huge opportunity. And that's just from having a perspective of, right, this is the hurdle that's been put in front of me. How can I overcome it? And like I said, that can talk to those 65 people about having a set return or having an equity stake. They can find out exactly what each one of those investors is looking for, and they can work to mutual benefit, which is a fantastically exciting opportunity for that individual. This is one of our Source partners, one of our franchisees, and this is Chris. This is his first ever property deal, which is a commercial to residential conversion. Here are the stats from that particular deal. Chris didn't put any of that money into the purchase price or into the build costs to convert those. It was offices, and he converted it into flats, and then started using those flats as serviced accommodation down in Bournemouth. So option number two, or solution number two, is security over another asset. So if you have another asset in your portfolio already, and there is equity in that asset, then you can use that to leverage against to purchase, to then borrow money to purchase what you want to purchase next. Now, it doesn't have to be a property. If you've got assets, then it might be possible for you to leverage against those assets. So you find out where you can get that money from, get the assets valued, and then find out how much they'll lend you. Now, if that is a property, let's say, that means that you can keep your portfolio. You're not selling your portfolio to raise the money in order to borrow against the next property, but it means you get to keep the portfolio and you're expanding the portfolio at the same time. So that can be a really good way for you to keep everything the same, maximize your borrowing based on the portfolio that you already have, but keep on expanding. Because like I asked you the question about what are you looking for? You're looking for overall longer term wealth. Then obviously you're going to pay that money down over time, and you're going to build your overall asset wealth, which is what the majority of you are interested in, which is what we determined from the poll. Now let's have a look at below market value. So below market value to us is the purchase price against the surveyed value. So if a surveyor comes out and says that that property is worth £200,000, even if you think it's worth £250,000, it's all about what the surveyor says, because the surveyor is the person that decides whether your deal goes ahead or not, essentially, based on the value that they give your deal. So if a surveyor's been out and they've valued your property and your purchase price is still below what the surveyor has said the property value is, then that's below market value. Because the lender is going to lend to you based on, well, there's actually two different answers to this. In most cases, the lender will lend to you based on the surveyed value or the purchase price, whichever is the lower. And that's a normal mortgage. However, there are lenders out there, especially bridging finance companies, who will lend to you based on the surveyed value, even if the purchase price is lower. And I know that because I'm sitting in the same building as one, because I know Source Capital do exactly that. And what are lenders looking for? They're looking for day one security. So they don't want to lend to you. Let's say it's simply 100% of the purchase price. Lenders, like mortgage companies, don't want to lend you 100% of the purchase price, because if they had to repossess your property straight away, they would have no security. So they would have to sell it for the same amount that you bought it for in order for them to get their money back. Whereas what they want is they want to be able to sell it for, say, 80% of the value or 75% of the value, because that gives them more certainty that they're going to make that money if they have to sell it quickly. So that's what they're looking for. Therefore, the wider the margin between the purchase price and the surveyed value, the more likely you are to be able to borrow all of the money. So let's look at a bridging company. So if a bridging company says, we'll lend you 70% of the surveyed value, and you get the property surveyed at £100,000, that means that they will lend you £70,000. Now, if they lend you £70,000, but actually you're not buying it for £100,000, you're buying it for £70,000, where you're able to borrow all of the purchase price at that point. So you wouldn't need to put in a deposit for the purchase. Now, I will caveat that and say, obviously, what most bridging companies do is they will take off your fees from the day one that they give you. So let's use this example where the property's worth £100,000, you're buying it for £70,000, and the fees are going to be £15,000 from the bridging company. Then the bridging company will say, well, we'll lend you 70 grand, but we'll take off our £15,000 worth of fees. Therefore, we're only going to give you £55,000. So you'd still have to find the other 15 grand. Now, like I say, I know Source Capital does this, and they also, on the first deal that any of our partners, any of our franchisees do, they roll over the fees to the back end. So Source Capital wouldn't do this to anybody that's part of Sourced, but most bridging companies do. So that's something you need to be aware of. The bigger that margin between the purchase price and the surveyed value, the more likely you are to be able to borrow the full purchase price, which is where you want to be. So that relies on you negotiating. And the best way that you can do this is by getting to know the person that is selling the property. I tell our guys, when I go to a property, I will ask the estate agent if the vendor is going to be home. The estate agent will give me 2 or 3 different options for when I can go and view the property, and I'll say, is the vendor going to be home during any one of those times? And the estate agent will tell me. Now, they'll think that I'm asking that question because I don't want the vendor to be there, but it's the exact opposite. I want the vendor to be in. And if the vendor is in during our viewing, I'll make sure that I turn up half an hour early before the estate agent gets there, and I'll stand outside looking like I'm about to, I'm about to come on the viewing, because I want the vendor to come outside and I want to have a conversation with the vendor. I want to talk to them about their situation, because, well, that's a little tease. We'll go on to the creative strategies, and I'll tell you why in the creative strategies. But this is Phil, another one of our partners. Phil wanted to grow his portfolio. He was already in property. He wanted to join us for access to source capital so that he could fund more deals. And his first deal was just a straight bog standard vanilla flip project in which he created £40,000 worth of profit. Let's look at these creative purchases and work out how they can help you. So again, we're looking at the property price versus the surveyed valuation, and we're looking at ways that we can manipulate that in order to make borrowing more easily affordable for you. The first one, let's use the previous example. So we've got a property that's worth £100,000. Now, if the property price is the same as is very close to the surveyed valuation, then clearly you're not creating that margin. So the property's worth £100,000, and you're buying it for let's say £95,000, because you just physically cannot squeeze any more money out of this vendor. They will not drop below £95,000, but you know that the deal still works. But if you're borrowing £95,000, you need to put in too much money, and you can't find that money from anywhere else. This is something that you can propose to the vendor, and that is to split the purchase price. So if you say to them, you want £95,000 for this property, I'll give you X amount on completion, and then what I'll do is I'm going to refurbish the property and I'm going to put it back on the market and I'm going to sell it. And when I've done that and I've sold it on, or I'm going to split it into flats and then I'm going to sell the flats, or whatever the project is, whatever the strategy is that you're going to deploy on that property. And then once I've done that, I'll pay you the remaining balance. And you know what? I'll give you a little bit extra to thank you for leaving your money in the deal. That's a vendor finance route, and that is incredibly powerful for getting deals across the line. Now, you might think, well, why would anybody do that? Well, it depends on that vendor's current situation. Because if they don't need all the money on completion of the sale of that property, because it's a property that's been in their portfolio for a while, they're not dependent on it, they're not upgrading their property, they're not moving on, they just don't want to run that property anymore as a buy-to-let or a HMO or whatever, then, and they don't need that money, then why wouldn't they leave some of it in on your deal and make a little bit more money on top? So let me show you exactly what I mean by that. So you agree a deal, and you agree to buy a property for £200,000. On completion, you say, I'll give you £100,000 on completion, and then I'll split that property into flats and I'll sell on the flats. And once I've sold the last flat, I'll pay you another £150,000. So instead of them getting £200,000 for the property, if they're prepared to wait a little while and leave some of that money in the deal, then they will make an additional £50,000. Now, obviously, you can manipulate those numbers to represent what looks like value to the person that you're negotiating with. However, that's just an example. That's their incentive. They're making more money. And your incentive to offer that to them is that you get that deal over the line. And you're only offering them another £50,000 because obviously you're putting more money than that in your pocket. So you're putting more money in your pocket, you're giving yourself access to that profit margin, but you're also showing them why they would do it too. So that's simply splitting the purchase. And you can do that using the normal exchange contract that estate agents use all over the place, right? So that is not overly complicated legal processes being put in place to make that happen. Now, when it comes to security, that person is going to say, well, what is the security that I can have on that money being invested into your deal? Because at that point, I don't own the property, so therefore I don't have any rights over that property. I gave you a list of them earlier on in this presentation. So you've got an RX1, you've got a personal guarantee, you've got a second charge. You've got lots of different ways that you can facilitate that happening to give them the peace of mind that their investment, the money that they've left in, is secure. That's one way. So we'll call that split purchase. So this second way is an exchange with delayed completion. Now let's look at this as a creative way for you to get a deal across the line. So you start the conveyancing process, and then in the conveyancing process, you request that you elongate the amount of time between exchange and completion. Now, again, you might be thinking, well, why would any vendor wait for longer in order to get their money from completion? Well, you know, has the property been on the market for 6 months? Have they had any offers? Have they had any viewings? What if you're the only person to have gone to see that property and they really want to get rid of it, but they know that they're going to have to be a little bit more flexible to achieve the money that they're looking for in order to get that property sold? So you ask for more time between exchange and completion, and you also make sure that you get access to the property to start work before completion. So between exchange and completion, you start your work. And that means that when you come to complete on the property, the value is higher than what you're actually buying. Because, and again, let's have a look at these icons at the bottom. You agree that you're going to pay £100,000 for the property. You start to do the work on the property. So you're between exchange and completion now. And by the time you get to completion, the property isn't worth £100,000 anymore. It's now worth, let's say, £500,000. But you're still paying £100,000 for it. So now your borrowing can be based on £500,000 because that's the value, not £100,000 what you're buying for. So that increases the chances that you're going to be able to borrow all of the money that you need in order to purchase the property. So like we said, some lenders out there will look at the value of the property or the purchase price, and they will lend you the lower of those two numbers. And that's what mortgage companies do. So the mortgage company would still give you 75% of £100,000 in this case. However, we know that there are some people out there, of which Source Capital is one, that will look at the value of the property, and they'll still lend to you based on the value, regardless of what purchase price you're paying. So these companies would look at 70% of the £500,000, not 70% of the £100,000. I think I just got a question. Let me just have a look. No, I can't see. So that one is called an exchange with delayed completion. So that's an exchange with delayed completion. The previous one is a split purchase. And these are both creative ways that you can reduce the amount of money that you need to put into a property deal, rather than just straightforward buying it with a mortgage company where they're going to be looking for at least a 25% deposit on an investment property. It's all about knowing the process, and it's all about knowing what options are out there for you. So what we've done in both of these situations is we've used a bridging company, and that bridging company has specifically looked to lend to you based on the value that a surveyor has given it, rather than the purchase price. I do have a question now. Let me just have a look. Can someone with no property invest in properties? Yes, you can. Yeah. I just showed you one of our franchisees, Chris Richardson. That was the first deal that he did. He bought an office block, and he turned it into 14 flats. So that was the first deal that he did. Here's another one of our franchisees. This project was funded by Source Capital in 5 minutes. He sold it off plan on the same day that it was put onto the market. And now, that was the first deal that he did. He's now moved on to the third deal, of which it's a 21-unit new build estate. So he's scaled up, and scaled up. Now the fifth different strategy, this one is joint ventures. Now, like I said to you, the best thing that you can do is get to know the vendor, because the vendor is who we're going to joint venture with. Traditionally in property, you'll look at joint ventures, and most people will talk about joint venturing with somebody who's got money, because that's what they need. Whereas with us, actually a better way to solve the problem of what you're looking for is to joint venture with the person that owns the property, because they've already got the property. So if they can bring that to the table, and you can bring the experience, or you can bring whatever else is needed to get that project across the line, if you can bring that to the table, then that's an easier thing to do, because you've already found the property that works. Now, like I said to you before, the best way that you can assess whether joint venturing with the vendor is an option for you is to get to know the vendor. Get to know the vendor, but more importantly, get to know their situation. Do they need to sell? What are they selling for? Do they need all the money on completion? Are they looking to invest? What is their exit strategy? Once they've exited this property, what are they going to do? All of those questions, and that's why I like to meet the vendors at the property if I can, because that's the best way to find out what their situation is. So you have a conversation with them, you find out what they're looking for. Maybe it's a half completed project, or maybe they bought it as a project, but once they'd bought it, they got intimidated that they couldn't do the work to it. Now, maybe that's the skill that you bring to the table and say, well, look, how's about you bring the property, I'll do the work, and we'll split the profit once it's resold. You might not be splitting it 50-50, it might be 80-20. It might be a different, that's all down to your power of negotiation and how much you can sell to them what you can bring to the table. But that is a great way of quite easily finding property and then having access to that profit margin. Infinite structures when it comes to joint ventures, it just completely depends on them. Now, what our franchisees do, what our partners do, is they go out there, they have these conversations, they tend to come back to their support person and have a conversation with the support person. This is the situation, this is what they're looking for, this is what they're doing, this is what they need to do by this date, how can we make this work? And then we'll have a sit down and plan out the best options for what can then be taken back to the vendor and proposed to them as a solution for their problems. Because we look to solve problems all the time, but we do that because that's the best way to get deals over the line. If you're solving somebody else's problems, but it also benefits you, then that's a deal that you're very likely to get, because you're working with them and you're working for what they want as well as what you want. So like I said, here's an assisted sale. And an assisted sale would be something that you do with a joint venture owner of a property. If you don't know what an assisted sale is, go and have a look at our YouTube channel, because we've got a video on assisted sales on there. Now, this is the hotel conversion that I told you about before. It was funded by us in just one day. The plan is to sell the units during conversion, and there's over £1 million in that deal. This is the app that I talked about before as well, the Source Property Investment app. So if you want to look for properties that are investment properties that our franchisees have found, or if you want to look at opportunities to invest with our franchisees, you can see those opportunities on the app. It's available on the App Store and on Google Play. Now, that bonus 6 strategy that I talked to you about, well, that bonus 6 strategy is simply using somebody like Source Capital. Source Capital is a GDV lender. Now, what that means is they can lend you up to a 70% of the end value of your project. So not the day one value, the end value. So in this really simple example we've got on the screen, if you've got 100 grand purchase price, if you've got 50 grand works costs, and the end value is £250,000, 70% of £250,000, the end value is £175,000. Now, if the margins are right and the valuation is right against the purchase price, you could borrow up to £175,000, which covers your purchase price and covers your works cost. And that's what a lot of our franchisees have done. We'll go back to Nigel, who I showed you earlier. That's exactly what he did. He borrowed all of that money. He bought that property. He turned it into a HMO, and he's added that to his portfolio. So we've facilitated that for him. Got another question, so let me just have a look at the question before I move on. What is the rate of interest on the 6 strategy? Well, it's bridging finance, so it's 1% a month. That is the rate of interest that then goes to the investors. So let me go to this one. So that all I've talked about so far is previous deals. Now, these are agreement in principles. These are offers that Source Capital have put out to people as well. So it's not just historically that Source Capital have been able to fund up to 100% of the purchase price and the works costs. but it's something they're actively looking to achieve now as well. So the purchase price for this, 577, build cost 255, GDV 1.6. The important box there, the franchisee contribution, was 0 to purchase that castle in Scotland. That was the offer that was put forward to the franchisee. Here's another one. Purchase price 275, current valuation 300. So there's not much gap there between those two things, between those two values. However, in this case, the franchisee contribution to purchase that house was £3,300. And that contribution is towards the purchase price and the works cost, just like the previous one. So there's still upfront costs that are required that the franchisee will need to fund, like solicitors' costs and survey costs and that kind of stuff. But what we're mitigating for here is that deposit that mortgage companies will require at least 25% of the purchase price from you. So here's a second question. So let me go to here and then put up this second poll. So this poll, which would you find the most useful to help you hit your property goal? So would it be a support person or mentor? Would it be a CRM or deal calculator and softwares? Would it be access to funding? Would it be property leads? Would it be access to sell deals? Or would it be simply training? Now, we've sort of hinted at quite a lot of training on this webinar and all the non-standard ways that you can get deals across the line. So what out of this list would you find the most useful to help you move forward and create and build your property wealth? So I'll just leave this on for 10 seconds or so that you can provide an answer. It's really interesting so far. And look, I really appreciate you answering these questions. It helps us going forward when we're creating webinars. It helps us tailor the webinars to exactly what you're looking for. So the more of you that can answer, the better the next webinar is going to be, or the more appropriate the next webinar is going to be for helping you move forward. Okay, I'll end it there. Appreciate your involvement. Thank you very much. So if you're going to start on your own, if you're going to build your own property wealth, what do you need? You need marketing and branding. You need website for credibility. You need supplies. You need training. Look, hardly anybody said training, which surprised me on that last poll, because all of these creative strategies that we're talking about, if you don't know about them, the only way to know about them is to get trained on them. So training, you're going to need to look after your salary if you're going to put yourself into property full time, and you're going to need some investment capital, because if you're doing it on your own, you don't have access to the trade and you don't have access to somebody like Source Capital. So you need your own investment capital to start buying stuff. So let's say 50 grand that you're going to need in order to get your business off the line. If you're going to purchase property leads, investor leads, software, if you're going to continually pay for marketing, if you're going to pay for a mentor to look after you on a month-to-month basis, if you're looking at even making an application to a lender costs money, unless you're going through Source Capital because you're a franchisee, because we don't charge our franchisees for that. If you're looking at monthly training events to continue your learning journey, if you're looking at networking and networking, if you're looking at documents and contracts, and just purchasing a contract for a rent-to-rent deal can cost a couple of £1,000s from a solicitor, but it's the right thing to do to make sure that you're covered and your liabilities are not going to bite you on the arse later down the line. You're looking at spending about £5 a month putting all of that together. And you can get these from the market. So if you're looking for training, you can get that from a trainer, and it can cost you about £25,000 a year. If you're looking for support, if you're looking for unlimited support, you can get that from a mentor. And I used to do this actually before I was part of Source. And that can be £500, £600 a month. If you're looking for investor leads or property leads, you're looking at 50 quid a lead, and you can get them from a lead generation company. So all of these things are available on the market. If you're looking to sell a deal, you can sell it to an estate, or you can sell it through an estate agent. They're going to charge you 1%. If you're looking for funding, you can get that from a lender. If you're looking for an agreement in principle, which is critical when you're securing deals through estate agents, again, you can get that from a lender. If you're looking for joint ventures, you can go out and you can find a JV partner. So all of these things that we're talking about are available on the market. However, this is the package of goods that we give to our franchisees. And the cost of being involved in this, instead of having £50,000 startup capital and £5 a month, we charge our franchisees £10,000 plus VAT to start up and £315 plus VAT per month. That's what we charge them. And then they come on board, they get access to this package of goods, and we work together at building their property wealth. That's what we're here for. That's what we've done incredibly successfully over the last 6 years. That is what we continue to do. If you've got any questions about what we do, if you've got any questions about the training, the creative strategies that we've talked about, or different ways that lenders look at putting deals together, you can either ask now, or you can email my colleague Sam, and his email address is sam.clayton@source.go. And Sam will answer your questions. Sam will help you out if you don't want to ask the questions now. But right now, I'll stay around for the next 10 minutes or so. What time is it? Yeah, I'll stay around for 10 minutes. If you've got questions, please use the Q&A box at the top. Ask me the questions, and let's see if I can help you move forward today. Just out of curiosity, I can see how many people are still on the webinar. We've still got about 90% of people on the webinar. Just out of curiosity, anybody know what an assisted sale is? I'm not talking to the people that are part of Source, actually. I want to make that clear, because you should, by default, already know what an assisted sale is. Because those creative strategies, what we like to do is, I point people towards that creative strategy training, because I think it's really important that our guys have these creative strategies, that they understand them, understand how to use them, understand the application of them, and they keep them in their pockets, because the right situation for a creative strategy might pop up from anywhere. It could be a contact at the school gates. It might be an old friend that you've not seen for years. It might be somebody on Facebook, and they contact you, or they just have a conversation with you because they bump into you, and they tell you about this situation in property. And then you know exactly how you can structure that to make that work. And you can have a sensible conversation with them straight away. Okay, so let's have a look. So where David Harris, you've attempted to answer that question. Not quite right. Where a person sells directly to a specialist company or investor. Not quite right. Jamie, you don't know what an assisted sale is. Okay. Let me see if we've got enough time where I can explain what it is. What percentage of Source franchisees are successful? Really, really, really good question. We do not require our franchisees to tell us how much money they're making. It's not part of our franchise. We're quite an unusual franchise like that, because we don't currently charge them based on their profit. I would say successful is a difficult word to answer as well. I'd say about 80% of our franchisees have made money, and the other 20% might have just started. I'm not sure. Would it be possible to use Source Capital to purchase a discount from an LPA? Yes, it would. Yeah. The LPA, though, the only thing that you need to be careful of with that is the LPA's responsibility to get the highest price possible for the property, and therefore you haven't truly secured the property when you go through until you get to exchange of contract. The LPA will not guarantee that you are the only person that's going to buy that property. So if somebody comes in with a higher offer, like the day before you're going to exchange on that property, then you'll lose it if the LPA wants to go with a higher offer. So yes, you can use Source Capital for that. However, buying from LPAs is a risk. So just be cautious about that. Fee structure, 10 grand plus VAT as a one-off, then 315 plus VAT from day one for 5 years. Yes, that's correct, Rowan. The £10,000 plus VAT to start off with, it doesn't have to be a one-off, but you do have to pay the full amount before you start. So if you pay it in two, pay some of it this month, pay some of it the next month, you can do that, but you will have to pay the full amount off before you start. David, you know an assisted sale? That's good. Not sure if I missed this, but as a new business starting out in deal sourcing, do you support with structuring an approach in selling deals for finder's fee? Yes, Santa, yes, we do. That's a different course. That's the deal sourcing course. But we've got a set process that we encourage our franchisees to use. It's a set process that's netted hundreds and hundreds and hundreds of thousands of pounds worth of deal sourcing revenue. So yes, we do. Ryan, you've asked for a copy of the slide deck as currently you're in another meeting. This will get emailed to you tomorrow. So I guess, Ryan, the email address that you've given me on your comment is the same email address that you used to register with. If so, it will be sent to you. Not the slide deck, but the recording will be sent to you tomorrow. No more questions. I've got through them pretty quickly. So look, one more, hang on. Where is the location for the training, or is it just online? No, the training, we do live training and we do online training. We do live training and online training. The live training is near Manchester, and the online training is obviously available to you whenever. So, really appreciate your time. Thank you for spending the afternoon with me. I know an hour is a long time to spend just talking about property. I could talk about property for the rest of the day, but unfortunately, I've got meetings that I need to go into now. But thank you very much for spending a little bit of your afternoon with me. And if you've got any other questions, please use the email address that is on the screen, sam.clayton@source.co, and Sam will get back to you. But in the meantime, I wish you a very successful rest of the week, and hopefully I'll catch up with you soon. Thanks very much, guys. Cheers.